Yeah, that's right. We're in the dog days of summer, that's for sure. But if you think the market's going to crash, you might be barking up the wrong tree. I'm Lambros Demos. This is Live at Lunch. Thank you so much for joining me on this sunny Wednesday afternoon. Hope you don't mind the dogs barking there. It's better than the construction that's going outside my window. So I apologize in advance if you do hear some noises because it's been pretty noisy going on. That's why I was a bit late here. I had to wait till the drilling stopped so I can go live. And I see people are joining me right now. Thank you so much. I'm going to keep this short and sweet today, a little bit under the weather. So I'm just going to get straight into the stats. But at the same time, I would like to take your questions. So if you do have any questions, by all means, please post them here and I'll try to answer them while I'm on the air. If you're watching this on the replay, by all means, you can still post your questions and I'll get to them as soon as possible. And don't forget, when you post your questions here, you don't know who else has the same questions. So we're actually helping out other people who may have the same questions. So that's why I like to answer it live and while people are here. But if it's something of a more sensitive or personal nature, by all means, you can send me a DM and then I can answer it there. Okay, let's jump into it. As I mentioned off the top, these are the dog days of summer. I don't even know what that means. Dog days of summer. I'm assuming it means slow time, lazy time, maybe. Not that dogs are lazy, some are, but sales are pretty slow. Okay, everybody knows that now. You may have seen some reports from the Toronto Regional Real Estate Board saying, "Oh, sales are up year over year, etc." Okay. Yes, they are up, but we have to look at the big picture here, and we have to look at it in context. Last year was a very slow year, so it doesn't take much to have more sales than last year. And the year before that, in 2022, was probably the lowest number of sales for the month of July, probably in all time, at least going back this century. So, and don't forget what happened in 2022. We had the interest rates started climbing, started going up. So people kind of put their real estate buying on hold at that point in time. We had the lowest number of sales for July. In 2023, interest rates were still going up. Remember, we had a hike in June and July of 2023. So people weren't buying. So we probably had the second lowest number of sales in 2023. And now in 2024, we probably have the third lowest number of sales. And so when you say, yes, they're better than 2023, hardly. There are only 3% more sales this year than last year, and about 10% more than the worst ever sales in 2022. So that's the context there. So don't get carried away when you hear, oh, sales are up, et cetera, et cetera. Sales are down month over month. So they're up year over year, about 3%, but they're down month over month. Okay, so that's the other thing that you have to look at is the trend month over month. And despite the interest rate cuts, we had an interest rate cut in June, and another one in July. So a lot of people were thinking that this may light a fire under some of these buyers and get them back in the market, but it doesn't seem to be happening. Why? Well, it's not enough. The interest rate cuts are not enough because there were only quarter point cuts, which now the interest rate is only down by half a point. Not enough to make a difference. And home prices are still high. Home prices are still unaffordable. And we have the stress test as well. So you have to qualify at 2% higher anyway. So things are still unaffordable for people, especially first-time home buyers. So when you take the first-time home buyers out of the market, obviously sales are going to drop. And it appears that the only people buying now are move-up buyers or downsizers. So that accounts for the number of sales. And to put it in even more context, the sales in the last 3 years, including this year, were around the 5,000 per month sales. That's half of the sales that we were experiencing during the pandemic years when interest rates were dirt cheap, and the market was going crazy, and we had record number of sales for every month, including July, up and around, averaging around 10,000 in the month of July. So now we're down to about 5,000, which is just half of that. So that kind of tells you how far we've fallen from the pandemic years. But again, those pandemic years are an aberration, right? So it's not the normal. It's not the normal. The normal before that was averaging between 7,000, up to around 9,000 sales per month in peak years. So the market started picking up in the mid-teens, maybe 2014, 2015, 2016 was a good year, until 2017 things came down because of the foreign buyers tax, etc. So in there, we were averaging 7,000, 8,000 sales. So that was the norm at that point in time. Then the pandemic threw everything out the window. People started getting used to all these real estate sales and things selling, in hours, never mind days. We had 10,000 plus sales per month. And now we're down to about 5,000 sales per month. So everybody's, panicking and wondering, is the market dead, et cetera? Is the market going to crash? Well, in my opinion, the market's not going to crash. We're just adjusting to the new normal. We're adjusting to the higher interest rates, higher home prices. Like I said, unaffordability is still an issue. So it's taking a big chunk of people out of the market. So until interest rates fall even more, people will still not get in there and buy. I don't think prices will drop too much. A lot of people are talking about prices dropping, etc. But I can't see that happening unless there's a flood of inventory coming to the market. And that's unlikely to happen unless all these people who are about to renew, for some reason can't renew and they decide to sell. And that's the theory that some people are having. However, don't forget, we're in a reduction of interest rates environment right now. So by the time next year, it's about half of the mortgage holders, about 52% of mortgage holders will come up for renewal. So we're still a ways away yet. So it's not going to happen this year. Next year, when all these people have to renew, by that time, interest rates may have dropped even more. So we may be down another half a point, whatever, maybe a full, some people are saying it's going to drop a full point. Maybe at that point in time, it's going to allow some people to get into the market. That might balance some things out, in terms of supply and demand. So I don't think we're going to see too much of inventory flood in the market, which would drive prices down. Or something else crazy like another pandemic or something stupid like that. So barring anything else of that nature, I don't think we're going to see anything crazy happen in the rest of this year, maybe early next year. I think things are still going to continue slow, maybe a little bit, pick up a little bit in the fall, because don't forget, summer is a slow time anyway. So I think a lot of people are away. They don't want to buy over the summertime, or those that need to buy for whatever, they want to buy before the summer so they can move over the summer, get their kids settled in school, et cetera, et cetera. So I think after Labor Day, about mid-September, you'll probably see the market pick up a little bit. And by that time, there will be another interest rate announcement. And I believe there's going to be another interest rate cut. It's about 50-50 chance right now for that. But I'll keep you informed on that, regardless of which way it goes. So anyway, like I said, I just want to hop into the stats here real quick. This is month-over-month stats from June to July. In Toronto, the listings dropped 2% in Toronto, and the sales dropped 11%. Price dropped by 7%. But again, that's month over month. So that really doesn't mean much right now, unless we see a continuous drop month over month. Then you know that the prices are going to keep coming down. So I'll keep an eye on that for you. So inventory dropped about 2%, sales dropped about 11%. So again, we are seeing a very slow, typical summer. In Mississauga, similar story, except listing inventory went up. So it went up about 4% and sales dropped 13%. So again, that tells you that even though we have more houses there out on the market, sales are dropping, people aren't buying. Whether it's an affordability, whether it's the summer, et cetera, et cetera. There's a number of reasons why people can't buy right now. Prices in Mississauga dropped about 6%. Again, something to keep an eye on if they continue downwards. And a lot of this in Mississauga and in Toronto has to do with condos. Because condos right now are very slow to move, and you see a lot of these price drops in the condo market. Because when we look at Brampton and Oakville, which don't have as many condos as Toronto and Mississauga, prices remained flat. So that there was hardly any change, no change at all in Brampton, barely a change in Oakville. So that tells me a lot of these price drops are due to condos. So it could be that the condo price is driving things down at this point in time. Speaking of Brampton, however, we saw inventory go up about 7% in Brampton, and sales dropped about 20% in Brampton, which is no surprise because Brampton usually goes to the extremes anyways. When things are good, things are going really good or really well, and then when things are bad, things are going super bad in Brampton. But what's interesting is that even though sales dropped 20% in Brampton, the prices did not change. So it appears to me that there's just a standoff between sellers and buyers. So buyers are going in with these lowball offers, trying to get a deal, trying to, get the house for as low as possible. And sellers aren't budging. Sellers are sticking to their prices. They're not reducing their price as much as the buyers want to. And that's why prices aren't going anywhere. So they're pretty much, and why sales aren't going anywhere. So nothing's moving. And finally, in Oakville, we saw inventory stay flat. So no change in supply at all, and a drop of about 17% in sales. But Oakville is a very small sample size, so we can't read too much into that. But I only mention it because it is trending along the same pattern as the other areas. So there's probably something going on out there as well. Things are pretty slow. So that's why I said sales are down all across the board. And the other indicator of the market is the months of inventory. So when you divide the number of listings or supply by the number of sales, you get a number called the months of inventory. And it basically tells you how long it would take to sell the current inventory if no new supply came to the market. So in Toronto, it actually went up from 4.3 months of inventory in June to 4.7. So that's a slight increase. That means the market is slowing down. Okay. Another way of looking at it is so if it takes 4 months to sell something, that means any particular property has a 1 in 4 chance of selling in any given month. Okay, so you can look at it that way as well. In Mississauga, it went up from 3.7 months of inventory in June to 4.4 months of inventory in July. So again, it went up. In Brampton, it went up from 3.5 months of inventory in June to 4.7 months of inventory, almost 5 in 1 month. And then in Oakville, it went up from 4.4 months of inventory in June to 5.3 months of inventory. So it's taking pretty much 1 in 5 properties are selling. In Oakville, almost 1 in 5. In Brampton, 1 in 4.5 in Mississauga, and almost 1 in 5 in Toronto. So that is indicative of a balanced market. I know people will tell you, oh, a seller's market is 3 months or less. Balanced market is about 4, 5, 6 months of inventory, and a buyer's market is anything over 6 months of inventory. But I think in the GTA here, that's kind of extreme. I think right now some places are still some areas, some neighborhoods could be in a buyer's market for sure. Because buyers right now are pretty much hold the hammer. If they can't get approved for a mortgage, they can't buy anything. So unaffordability is still an issue. So, they hold the hammer right now. And a lot of sellers are just staying on the market, reducing their price, and not budging, in other areas. So that's why sales are not going anywhere. And we're seeing drops of 11%, 13%, 20%, etc., going on and on. Okay. So as I mentioned, I do anticipate more interest rate cuts coming. That hopefully will increase some consumer confidence, and things may pick up in the fall a little bit. But unless prices do come down more, we're not going to see a surge in sales again. So people calling for a rebound of the market, that's not going to happen, and the other way is not going to happen either. So we're probably just going to tread lightly, tread slowly for the rest of the way, until something significant happens. And maybe it doesn't happen. Maybe this is the new normal here. Maybe the market has now settled down and it's become a balanced market for both buyers and sellers. And this is what we're going to see for the next, little while. Okay. If anybody has any questions, I'm happy to take them now. Otherwise, I will jump off here and hopefully be back next week with some more updates for you. Oh, we do have a labor market update on Friday from StatsCan. So that may be indicative of what's to come in September as far as an interest rate cut goes. And then obviously we have the inflation rate coming up later this month as well, which also will factor into the Bank of Canada's September decision. Have a great afternoon, everybody.